So I would warmly welcome everyone again who was able to join the webinar today titled External Debt Restructuring on ISBs. I'm Netmi Fernando and I will be the host for today's evening. Today marks both a very important and a successful day for the island nation as we finalized USD 12.5 billion worth of ISBs in restructuring. With that news, it was evident that a lot of investors have been longing for further clarity on the market sentiment and the impact. So to officially start off today's session, I want to invite Mr. Dimanta Matthew, Chief Research and Strategy Officer, and Ms. Anjali Matthews, Senior Research Associate at First Capital Holdings, who will be your speakers for the evening to clarify and educate all of you on the finalization of the ISB restructuring. Following the presentation, Mr. Dimanta Matthew will be explaining everything in Sinhala, and there will also be a Q&A session at the end where we would like to clarify all your doubts. Now, I would like to formally hand things over to Anjali. Over to you, Anjali.
Good evening, everyone. I'll be taking you through the bond restructuring agreement that was announced yesterday, on the 3rd of July, following the conclusion of the second round of restricted discussions with members of the steering committee, bondholders, and with parties representing Sri Lanka. So to provide you with an overview of the discussion today, that during the restricted period, Sri Lanka and the steering committee met in Paris on the 27th and 28th of June to discuss the terms of the external debt restructuring. The parties involved in the negotiations came to an agreement on the financial terms of the restructuring of international sovereign bonds, where Sri Lanka has managed to secure a deal to move forward on the restructuring of about $12.5 billion of international bonds. The deal with the selected bondholders, who hold about 50% of the outstanding overseas bonds, does depend on the confirmation by the bilateral creditors and the IMF to ensure that the deal is compliant with the IMF's sustainability analysis. The restructuring of the international sovereign bonds has been one of the key conditions set by the IMF under a $2.9 billion bailout program, and the success of the negotiations landmarks a significant step towards the country's recovery from its worst financial crisis. So some of the key takeaways from the negotiation include the agreement of the parties' involvement on a framework for a deal that is linked to economic performance and a governance-linked structure as part of plain vanilla instruments, versus a 28% haircut on face value and an 11% reduction of past interest, with payments on the interest component to start from September. So gains under GDP will be capped at 85%, with the original principal minimum haircut of 15% on bonds. And Sri Lanka will also proceed to pay a fee of USD 225 million to persuade bondholders to accept the deal. The framework also proposes to swap $4 denominated fixed income instruments. So the table below provides a breakdown of the proposed joint working framework with the indicative terms of the new bonds under a macro-linked bond structure. So under the past due interest, there are 5 bonds that are issued to cover interest of 1,678 million from 2024 to 2028 over a coupon rate of 4%. And then under the new bond installments, there are series and principal will be adjusted according to the country's economic performance downwards, which would therefore offer larger payouts if Sri Lanka's economy outperforms the IMF targets. So within the table, The first macro-linked bond has a coupon of 3.75% from 2028 to 2032, and a rate of 3.5% up to 2027, with maturities in 2029 and 2030. The macro-linked bond 2 has a coupon rate of 3.75% and a coupon rate of 4% between 2028 and to 2032, and a coupon rate of 8.75% from 2033 onwards, with maturities from 2031 to 2033. The plain vanilla bond 2 has a coupon rate of 4% until 2027, and a coupon rate of 5.5% from 2028 to 2032, and a coupon rate of 9.25% from 2033 onwards, with maturities from 2034. The macro-linked bond 3 has a coupon rate of 4% until 2027, with a coupon rate of 5.5% from 2028 to 2032, and a coupon rate of 9.75% from 2033 onwards, with maturities in 2036. And finally, the macro-linked bond 4 has a coupon of 4% until 2027, and a coupon rate of 4.25% from 2028 to 2032, and a coupon rate of 9.75% from 2033 onwards, with maturities in 2030. So this next table provides an overview of GDP thresholds under the updated macro-linked bond structure, where gains in GDP will be capped at 85% of the original principal. So as you see within the GDP thresholds that are above the IMF baseline, when GDP increases, the haircut rate falls, and in turn, the weighted average coupon rate increases. So when GDP is at 100 billion, with the principal amount now being 85%, and the weighted average coupon rate increases to 8.2%. Conversely, below the IMF baseline, when GDP falls below the baseline, the haircut rate increases while the weighted average coupon rate stays the same. So if GDP falls to 86.7 billion US dollars, then the haircut rate falls to 45.4%, and the weighted average coupon rate remains at 6.3%. I will now through the rest of the tables.
Yes, thank you, Anjali. So here, what we are actually seeing is how the payments are going to work, as Anjali explained in the previous slide. You have a number of bonds. So basically, the number of bonds are divided, or the maturity is 24 up to 2038, right? So and under different scenarios up to 2027, as you can see, the maturities or the haircuts won't change, or the principal payment amounts won't change, and beyond that, you can see that there's going to be sizable changes as the GDP performs better, and if the GDP contracts, also in dollar terms, there is a reduction in the, as again explained. So basically, there is going to be a higher amount of haircuts when the GDP is actually contracting. So let me explain a few items in Sinhala as well. Anjali, if you can go to the previous slide. Yeah, slide number 5, please. Give me a second, Anjali. I'll share on my side. So I'll explain a few items in Sinhala as well. මෙතන debt restructuring වල දැන් මේ පළවෙනි කියන section එක ගත්තොත් අපිට මේ වෙනකන් දැන්ට ගෙවා ගන්න බැරි වෙලා තියෙන interest portion එක තමයි මෙතන තියෙන්නේ ඩොලර් මිලියන 1678ක් මෙතන තියෙනවා ඒක ඒකට කරන්න බලාපොරොත්තු වෙන්නේ ඒ සඳහා bonds 5ක් issue වෙනවා 2024 ඉඳලා 2028 දක්වා bonds 5ක් ඒකට ගෙවන interest rate අවුරුදු පතා ගෙවන interest rate එක තමයි 4% පොලි අනුපාතය 4%යි එතකොට haircut එකකට පස්සේ ඉතුරු වෙන ඉතිරි ප්‍රමාණය තමයි බිලියන 9 මිලියන වලින් ගත්තොත් මිලියන ඩොලර් මිලියන 9036ක් බිලියන 9ක් හැටියට අපිට ගන්න පුළුවන් එතකොට පහක් තියෙනවා ඒකෙත් MLB1 කියන්නේ macro link bond number 1 කැටගරි එකේ අතරම කැටගරීස් පහක් තමයි තියෙන්නේ වර්ග පහක් තියෙනවා එතකොට MLB1 කියන එකේ bonds දෙකක් තියෙනවා 2029 2030 වෙනකොටත් අපි ගෙවිය යුතු bond දෙකක් තියෙනවා ඒකේ coupon දෙකක් තියෙනවා 2028 ඉඳලා 32 වෙනකන් 3.75කුත් වගේ තමයි තියෙන්නේ මේකට කියනවා step up coupon කියලා ඉතින් පළවෙනි අවුරුදු 4 coupon එක අඩුයි එතකොට MLB number 2 කියන එකේ ඊළඟ අවුරුදු 3 mature වෙන bonds 3ක් issue වෙනවා 2031 ඉඳලා 2033 වෙනකන් එතකොට ඒකේ 3.75 මුලින් ගෙවලා ඊට පස්සේ 28න් පස්සේ 2028න් හැබැයි 2033 කියන බොන්ඩ් එකට 2033 අවුරුද්දේ 8.75ක පොලි අනුපාතයක් ගෙවන්න වෙනවා. එතකොට ඒ අතරේ 2034 35යි plain vanilla bond එකක් තමයි issue වෙන්නේ specifically කිව්වොත් මේ bond එක අර අපි කියපු macro link bonds වලට අයත් වෙන්නේ නැහැ ඒ කියන්නේ GDP එකේ haircut එකක් එන්නෙත් නැහැ ඊට වඩා තියනවට වඩා වැඩිපුර අඩු වෙන්නෙත් නැහැ එතකොට මේ ගාන එහෙමම ගෙවන්න වෙනවා 104යි 105.5යි අන්තිමට 2033 ඉඳලා පස්සේ 9.25 ඒ වගේම තමයි MLB number 3 number 4 කියන දෙකෙත් බොන්ඩ් වර්ග තුනක්ම තියෙනවා එතකොට ඔක්කොම coupon rates උත් එකම ගන්න සම්පහ අන්තිමටම 9.5ත් 9.75ත් වගේ අගයන් තමයි තියෙන්නේ right so මේකේ පැහැදිලි කරන්න තියෙන්නේ GDP එක වැඩි වෙනවත් සමග දැන් වැඩි වෙනවත් සමගම haircut එක අඩු වෙන ප්‍රවණතාවයක් තමයි තියෙන්නේ ඒ කියන්නේ අපේ GDP growth එක හොඳ වුණොත් අපේ IMF target එකට වඩා ගොඩක් හොඳ වුණොත් ඒ කියන්නේ මේ ඉක්මනටම මිලියන බිලියන 100 ඩොලර් බිලියන 100 දක්වා ඉක්මනට ගියොත් ඒ කියන්නේ 2025ත් 27ත් අතර ප්‍රමාණය තමයි මේ කියන්නේ 2025ත් 27ත් අතර ඉක්මනටම ගියොත් එතකොට haircut එක 15%ක දැන්ට තියෙන 28 ඉඳලා 15%ට අඩු වෙන්න පුළුවන් ෆෝම් කරනවා. එතකොට ඉන්ට්‍රස්ට් රේට් එකත් ටික ටික වැඩි වෙනවා 8.2ට. ඒ වගේම ඉකොනොමි එක කන්ට්‍රැක්ට් වුණොත් ඉකොනොමි එක තියෙන ගානට වඩා 88.6ක් තමයි තියෙන්නේ GDP එක ඩොලර් බිලියන. ඉතින් එතනින් ඉඳන් පල්ලෙහාට අඩු වුණොත් ඒ වගේම 84.7ට මේ අවුරුදු 3 ඇතුළත ආවොත් එතකොට 40කට hair cut එකක් මෙතන ඉන්ක්ලූඩ් වෙනවා. එතකොට ඒත් rated average coupon rate එක 6.3 අගේ දිගටම තියෙනවා. ඒක වෙනස් වෙන්නේ නැහැ. හැබැයි මතක තියාගන්න principal value එක දැන් hair cut එක නිසා අඩු වෙනවා. එතකොට අඩු වුණාම weighted average coupon එක ඒ ගානෙම තිබ්බට ඩොලර් වලින් ගත්තාම අඩු ගාණක් තමයි ගෙවන්නේ. Lower amount in terms of absolute numbers since the haircut is lower when the economy is contracting. Okay. Then this is the area මේක තියෙන්නේ absolute numbers කියන්නේ ගෙවන්න තියෙන ඩොලර් මිලියන වලින් ගෙවන්න තියෙන ගණන් ඒ අවුරුදු වලට අදාළව එතකොට ඔයගලන්ට පේනවා ඇති අන්තිම කොලම් එක මෙතෙන්දී බිලියන 15.9ක වගේ කෑෂ් ෆ්ලෝ එකක් අපිට ගෙවන්න තියෙනවා. එතකොට ඒක වැඩි වෙනවා GDP එක බිලියන 100ට දක්වා ගියොත් බිලියන 20කට ආසන්න මුදලකට වැඩි වෙනවා. ඒ වගේම GDP එක අඩු වෙනකොට අඩු වෙනවා. මේ graph එකේ වැඩි වෙන ප්‍රවණතාවය මේ අවුරුදු උපතා ගත්තාම දැන් මෙතෙන්දී if I explain in English the dark blue line is the IMF baseline and the lightest blue line if the GDP hits $100 billion if the within the period of 2025 and 2020 the amounts change, right? As you can see, it affects after 2027, right? So the performance is monitored in between 2025 and 2027. Right? Similarly, this is where the GDP underperforms the market or underperforms the IMF baseline. So light blue line is baseline, and then the dark blue line is the sort of the worst case scenario. Okay. The payment amounts come down. And to explain this slide, I will hand over to Anjali. Yeah, over to you, Anjali.
Thank you, Dimanta. So the next steps in proceeding with the debt restructuring include Sri Lanka presenting its proposal to all its bondholders, and then the bondholders would have to proceed to agree on the deal to finalization of agreements with the China Development Bank to restructure $2.2 billion in debt. And finally, the IMF would have to determine that the proposed framework aligns with the debt sustainability objectives. And I'll now hand it over to Dimanta and Ranjan to respond to any questions you have.
Thank you, Anjali and Dimanta, for the very informative session. And now I would officially open the floor for questions where Mr. Dimantha Matthew and Mr. Ranjan Ranatunga will be answering the questions. And I would like you all to type in any questions related to the ISB restructuring now.
Thanks a lot, Nethni. So if you have any questions, there is this Q&A tab. You can type in the questions there, or you can actually raise your hand to ask any questions. So I will just give a briefing first how it affects the bond market. So thing is now what we need to understand here is that the yield curve of the bond market is trading with a premium simply because we are in a restricted default state, right? And when this situation is taken out, and so we reach debt sustainability. Now that's what this external debt restructuring program will do. There will be a rating upgrade, and once the rating upgrade happens, there'll be a lot of investors who will be looking at investing into the bond market. So if you take the longer tenor bonds, we see longer tenor bonds trading above the 12% mark as well. So this could be an attractive level for the foreign investors to come in, and with it, there could be investments coming in, which will potentially reduce yields going forward. So that is what we can expect on the bond side. And Ranjan, would you be available for to give an update on the equity side?
Yeah. Yes, Walter. So on the equity side, what we feel is that mostly, given that this is a very positive news for the country as a whole, as well as the both capital markets, including equity and debt. So we believe that this is a very positive news again, and the mainly the how this will benefit the ASPI mostly is that. So right now, if you look at the trading multiples of the ASPI in terms of PE, the market currently holds around the 10 times PE level. So given that we have seen very good corporate earnings and having seen the economic numbers, economic indicator numbers, the main economic like the GDP, the PMI, and all progressing very well during the past few months. We believe that the economy is on a very growing path. So with that, we will expect corporate earnings also to do well. So along with that, with this, the risk of external debt restructure being completed, now we can expect the ASPI to mainly re-rate. So roughly if you see in the past, where has normally the ASPI in terms of valuation behaved, usually the market holds between the levels of about 12 to 13%. So, and right now we are seeing a discount of nearly about 20% in the market. And so we believe that there's an upside in the market in terms of the in terms of valuations right now. And in terms of the main sectors that is getting impacted in terms of like banks. So yeah, so on the banks, what we feel is that in the we saw during the as I remember in 2020 towards the 2022 second half as well as the 23 first half, we saw banks making massive provisioning for potential haircut for both the SLDBs as well as the ISBs. So SLDBs fell under the local debt restructuring, which was cleared up by the central bank and the Sri Lanka during September last year. And so after that, the provisioning that the banks were made banks made on the SLDBs will also bump up to the ISB provisioning to face in an event where a haircut was given for the ISB bonds. So now what we given that the banks have provisioned during the last few quarters, they actually provisioned about between 50 to 55% for a potential haircut and a day one loss on the new bond. So right now, what we are looking at is we are looking at a very favorable position where the haircut has been about for about 28%. So we believe that the banks are also adequately positioned to cover up the potential losses that will be coming from a haircut, as well as the day one loss on the new bonds that will be offered to the market. So with that, we believe that for the equity markets, on the bottom line, we believe that equity markets will will expect to gain in the near future, mainly because the concerns regarding the external debt restructuring is over, and now there are less hurdles in terms of risks that we have to look forward to in the coming next months. Yeah. Anything you need to add?
Yeah. So I'll add a bit in Sinhala. එතකොට මෙතන සිද්ධ වෙන්නේ දැන් අපි බලාපොරොත්තු වෙන අවදානම දැන් යම්කිසි දුරකට අඩු වෙලා තියෙනවා. ඒ කියන්නේ අපි ඩිෆෝල්ට් කියන රේටින් එකක ඉන්නේ. restricted default කියන රේටින් එකෙන් අපේ දැන් විදෙන තත්ත්වයක් තමයි තියෙන්නේ. අපි බලාපොරොත්තු වෙන්නේ CCC plus හරි CCC minus හරි A level එකට ලංකාව අප්ග්‍රේඩ් වෙයි කියලා. එතකොට ෆොරිනර්ස් ලගේ පැත්තෙන් බොන්ඩ් මාකට් එක ගත්තත් ඉක්විටි මාකට් එක ගත්තත් අපි හිතන්නේ ලොකු ඉන්ට්‍රස්ට් එකක් ඇති වෙයි කියලා. බොන්ඩ් මාකට් එකටත් 12-13 කියන රේට් එක සාමාන්‍යයෙන් ගොඩක් ඇට්‍රැක්ටිව් රේට් එකක්. ඒ වගේම ඉක්විටි මාකට් එකට හරි ස්ටොක් මාකට් එකට හරි ඊටත් වඩා attractiveness එකක් තියෙනවා. මොකද මේ ගොඩාක් undervalued level එක තමයි මේ market එක තියෙන්නේ. ඒ වගේම දැන් banking කියන්නේ සාමාන්‍යයෙන් හුඟක් investors ලා විශේෂයෙන්ම විදේශීය investors ලා මේ ආයෝජනය කරන තැන. මොකද ගොඩක් සල්ලි ඒ blue chip counters වල දාන්න පුළුවන් නිසා. ඉතින් ඒ තැන්වලට වැඩිපුර ආයෝජන එයි කියලා අපි බලාපොරොත්තු වෙනවා. ඒ වගේම එතන තියෙන රිස්ක් එක සම්පූර්ණයෙන්ම වගේ මෙතනින් අයින් වෙනවා. මොකද provisioning requirement එක සම්පූර්ණයෙන්ම කරලා තියෙන්නේ. ඒ වගේම ඒක නිසා අපිට හිතෙන්නේ ලොකු වාසියක් තියෙනවා කියලා බැංකු වලට. මොකද මේකේ ප්‍රොවිෂනින් එක රිවර්ස් වීමක් නෙමෙයි අපි බලාපොරොත්තු වෙන්නේ. මම හිතන්නේ මෙතන ප්‍රශ්නකුත් තියෙනවා ඒ ගැන. can we expect a provision reversal for banks කියලා. සාමාන්‍යයෙන් banks කරපු ප්‍රොවිෂන් එකක් රිවර්ස් කරන ප්‍රවණතාවය අඩුයි. මොකද 5%-7% වගේ රිවර්සල් එකක් තමයි මේ එනවනම් ආයුත්තේ. අපි හිතන්නේ ඒකෙන් හුඟක් වෙලාවට ඒක යූස් කරලා බැංකු ඇත්තටම ඉස්සරහට තියෙන impairment provisioning amounts අඩු කරයි කියලා තමයි අපි බලාපොරොත්තු වෙන්නේ. එතකොට second half එකේ තියෙන ලොකු improvement එකක් එන්න පුළුවන් profitability වල. මොකද impairment විශාල ලෙස අඩුවීමත් සමග. එතකොට ඒකෙන් තවත් undervalued level එකකට banks පත් වෙනවා. banks විතරක් නෙමෙයි මුළු market එකම undervalued level එකක් තියෙන්නේ. මොකද banks එක්කම තව ගොඩක් companies තියෙනවා මේ level එකේ. ඒ කියන්නේ ISB bonds වල invest කරපු කට්ටිය. ඉතින් ඒකටම වාසියක් තියෙනවා already provide කළා නම් තියෙන්නේ. ඉතින් banks අනිවාර්යෙන් අපි දන්නවා 50-55ක් ප්‍රමාණයක් provide කළා තියෙන්නේ already face value එකෙන්. ඉතින් අපි ඒක තමයි බලාපොරොත්තු වෙන්නේ. Okay, we'll go to other questions.
Dimang,
So do you feel, yes,
there's
there's yes,
So
there's a,
there's one question asking about the day one loss. Because you explained the banking sector so well, I think if you could justify that also, we can wrap up the banking sector questions as a whole.
right, okay. So in terms of the day one loss, I think Ranjan also briefly explained, basically what when we had the discussions with the banks, so there was these provisioning for the current bond done around 30 to 35%, while for the day one loss, there is about 15-20% done. And when we checked with most of the banks, so this is, they believe that this is sufficient to cover the expected losses in terms of the day one loss. So with that, overall provisioning comes to around 50 to 55%. So the overall bank seems to be having advantage of over provisioning of around 5 to 7%. So we don't expect any further provisioning, and we are expecting actually significant improvement in the impairments going forward. So yeah, that's about it in terms of the questions. And I think there is this question on whether there could be further provisioning. That's what I just answered right now. Yeah, let me check whether there are other questions that we can take forward. How do you see the NAV of banks in the upcoming September and December quarter? So, Ranjan, do you want to take this question? Because it will depend on earnings, I think, rather than this.
Yes. Yeah. So we believe that there will be significant gains in terms of NAV in the coming months for the banking sector, but this will not be coming due to the bond deal announced. It will be purely driven by the profitability of the banks, which will go into retained earnings, which will boost the NAV in the coming months. So in terms of the profitability, few things that we have noticed in the banking sector during the past few quarters is that there seems to be massive gains coming in terms of the net interest income component, mainly due to the higher spreads that are being maintained by the banks. So if you look at the difference between the net lending rates versus the AWPLR, we have seen spreads almost above 3% levels. And this has widened since we had a look at it like a couple of months back, where the spreads used to be at about 2.5% levels. So this proves that the spreads are widening, and from this, what we can expect is that when loan book starts growing, we can expect massive numbers to come in while the spreads are up. However, given that the rates are coming down, we can expect spreads to narrow down in the coming months. However, we believe that this will be offset by the growing loan book, which is expected to be driven through private sector credit growth in the coming months as well. So that together with, from the other side, as Dimanta mentioned, in terms of impairments, yes, so we have with this deal, the concern regarding ISBs and the need for future impairments goes out of the window. So the remainder is what we have seen is the impairment that is done for the loans. So if you look at the main corporates in the banking sector, we have seen NPLs hovering around the 13.5% level in the entire banking sector during the first quarter of this year. And however, there has been a slight decline coming on the NPLs coming from the previous quarters as well, where we saw NPLs peaking at around 13.7% levels in the banking system. In the coming months, as the economy recovers, we expect the banking sector to further perform, where there will be less impairment provisioning on the outstanding loans, where while the economy performs, we believe that there will be repayments coming in, which will boost the profitability of the banking sector because of the lower impairments. So, so that being said, we expect the banking sector to grow well, and the NPVs in other terms as well is expected to grow, is expected to gain in the coming quarters as the profitability of the banks improve. Yeah, I hope I
Yeah, there's another interesting question, Ranjan, on the provisioning side. I think in terms of now we have these GDP thresholds that move up and down, and so in the case of the thresholds moving up, like if the GDP actually grows beyond IMF expectations, can you explain as to how it will, I think it will affect positively to the banks with lower haircuts? So if you can explain that element. Yeah.
Yeah. So, so in an event where the economy outperforms the GDP expectations, so our baseline targets lies around the 88 billion levels, where the best case scenario for in terms of for the bondholders, which will be the scenario, the third scenario, where Sri Lanka reaches a GDP of 100 billion. So in an event where the haircut will fall to 15%. So right now, again, as we had mentioned previously, so the banks are looking for provisions that they have made for around 30 to 35% in terms of looking for a haircut. So in an event where this falls to about 15%, we believe there can be good numbers that we expect to get reversed, or we possibly can get possibly can be moved to the future impairments and possibly get bumped. But this is a long way in the future because as Dimant explained previously, how the MLB linked bonds, how they will be weighed will depend on how the country will perform between 2025 to 2027 period. So if so it will all depend on that. So I think it's if the country will perform during that period, if the country the GDP performs as IMF expects or outperforms the IMF expectations, we believe that the banking sector, forget about the IMF deal, I think banking sector will drive the profitability itself, will drive the net asset value and the valuations of the banking sector as well. Because normally, banks are considered a proxy to the economy, where all economic activity flows through the banks. So in an event where the economy outgrows expectations, outgrows IMF expectations, the banks will be definitely the ones that will be driving it forward. So in an event like that, definitely the banks, of course, will be the number one pick for me if in an event where the economy outperforms the GDP, IMF expectation. However, that will again, it will be there be downside as well, where in an event where the economy downplays the IMF expectations. So in that event, the haircuts will go up to 40%. But again, we have to mention this will again be based on how the economy will play out in the future. And we will also see, so as again, given that the banks are again a proxy to the economy, we believe it can be used as a defensive share as well, where it will be like a hedge against the future profit drop. So because again, as a proxy to the economy, it will be performing in line with the economy. So as I mentioned, anyway, the banks expect to benefit in the coming months with the economy on the recovery trajectory with the momentum that we are seeing right now.
Right. Thanks, Ranjan. In terms of the questions, I think mostly banks. There is one question relating to the exchange rate. Yeah. So who determines the LKR USD rate for GDP calculation? Is there a agreed upon benchmark or a agreed upon procedure for CBSL to not to intervene in the free exchange market operations? So let me answer that question. This is how it happens. So targets and expectations and the conditions, IMF has already stated the expected level of uh, currency, and I mean all indicators has been clearly mentioned. So it's a matter of whether you achieve those targets or not. All indicators has been, in terms of assumptions, have been put in place. It's there in the IMF document clearly, including the estimated exchange rate. And in terms of the currency, it's like this. So IMF wants Sri Lanka to be have a free floated exchange rate. So at the moment, we do have a free floated exchange rate, but they want from the say IMF itself to use these dollar inflows to buy currency and buy dollars and build reserves. So wherever possible, central bank will try to do that. So on one side, they do get the funds from the IMF as well, which will directly go into the reserves. On top of that, they will look at meeting the IMF targets by purchasing dollars wherever necessary. And what happens there is that when the purchasers, when the currency is significantly appreciating, they will look at without impacting the trend too much to buy dollar. They do have intraday targets in terms of appreciation and depreciation as well. So whenever those targets are breached, they will of course step in order to buy or sell dollars, but it will be mostly onto the buy side because they need to build reserves at this moment of time. Yeah. Do you think Sri Lanka has negotiated favorably for haircuts, or the negotiators could have done better? That's a difficult question, but objectively looking at it, I think you have to also consider the status of Sri Lanka, where Sri Lanka is, what type of a country we are. So sometimes it's difficult to compare against other countries as well without looking at this. Now we are a middle income country. We have a certain per capita GDP level that we have. So all those have to be considered when the negotiations are taking place. So one country's negotiation to another country's negotiation, I think it's difficult. I think this macro-linked bond scenario, I think, is a very favorable scenario because it affects both sides. As the economy performs better, Sri Lanka's ability to pay obviously increases, and they've agreed to other way around as well. If the GDP doesn't perform, the haircuts are higher. So it affects either side, and to get that sort of a negotiation and for it to work both ways, I think they've done quite well in terms of negotiations to get it in that fashion because it favors both sides. It's a win-win negotiation. Yeah. So I'll put this question to Ranjan because it talks about capital adequacy levels of banks. So how this restructuring of international debt may impact liquidity and the capital adequacy levels. I think in terms of there's a few specific banks, obviously it will impact. Ranjan will probably answer as much as possible. Yeah. Over to you, Ranjan.
Sorry, Dima, can you repeat which question is this, please?
This is the question where we are talking about, or the question is about the capital adequacy levels, whether the restructuring, how it affects the liquidity of the banks and the capital how the money will come in and how that will affect the capital adequacy. Yeah.
Yeah. So so I will start with the capital adequacy part. So given that the banks are provisioned and there will be no impact coming in terms of the capital levels, we believe that there will be no impact from the restructure towards the capital adequacy levels. However, something in terms of liquidity starts to happen. For instance, the first repayment, as I can remember, is expected to happen on 30th of September, as I can remember.
Yes.
Yeah.
Correct.
So when that happens, the banks will also get a few amount of money from this deal, together with the consent fee of 1.8% that they're discussing now. So the consent fee will total to about 225 million. And together with the loan outstanding interest component that are due for this year, with that, the banks will receive some part of their money back, and this will obviously help them in terms of liquidity levels. So we believe that, so for example, we saw in terms of limited liquidity and limited capital adequacy, commercial bank went for a right issue. Couple of commercial bank went for right issue is the limited gap between the buffer between the required rate of capital, tier 1 capital, and the tier 1 capital they had. So as I can remember, the tier 1 capital of commercial bank as of the first quarter, the second quarter, as the results came, I think was around 11.9% or something, when they needed to have around 10% levels, which they had a very thin buffer, about 100 basis points. So commercial bank had to go for right issue because of this case, and we saw that happening. And if you look at the other banks in the banking sector, we believe that they are adequately capitalized, because compared to about 100 to 150 basis point buffer that commercial bank had, other banks are having about plus 300%, plus 350% buffer. So we believe that the other banks are adequately capitalized. However, there is the NDB, sorry, as I can remember, between NDB and Ceylon, there is one bank that is slightly on the buffer. Give me a second. There was one bank that was slightly on the buffer, who had around just falling short of about 300 basis points of in terms of tier 1 capital. So there's a possibility that there can be a if there is if the profitability get delayed, or the loan growth that we are expecting gets slowed down in the coming months, or which they will possibly need to raise a lot of funds to give out to use in terms of a lending. Yeah, Dima, can you take it up, Majang, for a second?
Yes. Yeah, so basically, I think most of the banks have about a 4% buffer, except DFCC, I think, is slightly lower together with commercial bank. So I think that's where, in terms of capital adequacy levels. Then we have loads of questions that
Yeah.
are there, but
Uh,
mostly
Dima,
on the,
can you excuse me, please, man? So,
yeah.
see, as I'm mentioning, there were a couple of companies that were on thin buffers. This is NDB and Ceylan, as I mentioned. So NDB right now is having around 12.5% in terms of tier one capital, and their required rate is 8.5%. So they're having roughly about a 4% buffer. While Ceylan Bank is having is at about 12.69% against 8.5, again about a 4% buffer, while HNB, Sampath, NTB and them has maintained above 5 to 6% buffers in the banking sector. So that's why we believe that the possible dilution of shares, except for the possible scrip dividends, is not on the cards right now, unless they are much in a requirement for boost up their tier one capital. Thank you, Diman. Sorry for this.
Yeah. In addition to that, there's question about potential benefits. I think we explained on that front where both the markets need to get re-rated, and so this is a very positive news in terms of the equity market and the bond market. However, I think both markets did not really react today for it. And other than that, let me look at whether there is any different questions, because most of the questions are on the banking sector and the debt restructuring. We've answered a lot of those questions. Yeah, I think day one losses also we answered the questions. Then again on the exchange rate front, we have a few questions. Yeah. There's a question as to how will the loss of investor confidence with the instability caused by the attempt to postpone presidential election at the moment affect the market in the future. So it's a question relating to the political outlook, or you could say policy uncertainty that could come because of this political scenario. So usually towards the election in almost every year, that there is a presidential election or elections in general, the market has performed really well, right? Obviously, because the spending increases. This year also not too different, because there is already a lot of spending that has started, and also together with that, there will be a lot of capital expenditure spending now that's going to start. And some of it has already started. So that is also there, but not to the extent in the periods. But I think the delay in the IMF, the delay in the debt restructuring negotiations, then this uncertainty about the presidential election postponement and all that is actually having sort of some impact. But gradually, I think those are getting cleared out. IMF came out, the third tranche is almost about to come in, and then debt restructuring is cleared out. And obviously, there's a case going on regarding the election date, and that will get cleared out. So with that, I think uncertainties are going off the shelf. And remember, with the rating upgrade, you will see a massive inflow of funds into the equity and debt markets as well, because a lot of foreigners are monitoring this. So I think it's an important factor where I think there will be inflows coming in, and that is fresh funds coming into the market, which is a big positive and help to re-rate the overall markets. Right. Okay. There's a question in relating to the NBFI sector, whether there will be an impact to NBFI sector. I think overall NBFI sector in general, Ranjan can give an answer, possibly with the inclusion of this as well. Ranjan, about the NBFI sector, if you can give an update. Yeah.
Yeah. So guys, in the NBFI sector, as of my knowledge, they don't hold any ISBs. So given that this is the external debt discussion, restructuring talk that had happened, and given that there have been no exposures to ISB, we believe that there is no impact coming from the debt deal to the NBFI sector that are coming up on the NBFI sector. We have seen during the past couple of months, starting off with the possible opening up of the import ban on vehicles. So in terms of NBFIs, we have seen that for most NBFIs, about 70% of their incomes are the interest incomes are generated through leasing and hire purchases. So with the closing down of the borders, the closing down of imports on vehicles, we have saw that their books got highly impacted, and their valuations fell to very slow levels. We are already seeing few of the banks, NBFS, already trading at about 0.5 to 0.6 times book value. And so if the countries open up for vehicle imports, we believe that this will be very positive for NBFS going forward as well. And from the other side, again, the economy is picking up, and with this, we believe that private sector credit growth will also grow. So in terms of the first capital expectations, we are expecting 7.5% growth in terms of private sector credit growth for this year. And until April, we have seen flat year-over-year growth in terms of private sector credit growth. However, we believe that this will peak towards second half of the year. We are expecting the loan growth to happen, mainly because of the decline in interest, as well as the resumption of all business activities around the country. The second point of benefit will come through there for the NBFI. On the other side, NBFI will benefit from decline in impairments as well, which will boost up their profitability. So overall, we can expect a very good time for NBFIs in the coming months. If the current conditions persist, and the current timelines for vehicle imports possibly without not that changing. So we can expect a good good quarters for NBFIs in the coming months. Yeah.
So I think there's a investor regarding a question related to restructuring again. A different question. Did you see the positive impact of SLDB's restructure, and how don't think the positive scenario you assign this restructure reflected when SLDB is restructured, and did banking stocks do well? So let me take that question. So I think we've started recommending the banking sector from last year, if you look at the re-rating of banks, we saw banks re-rating a number of times, especially after the domestic debt restructuring. There was an initial re-rating that happened in the banking sector, and then also the SLDB restructure also went positively for the banks. And if you look at the last 6 months, the banking sector has again re-rated significantly. Now, if I just tell you from last 4 months, we saw HNB at around 160 levels. Today it's at around 200 levels. Yeah, similarly, commercial bank also was in the 90s, and it came up to around 112, 113 before the rights issue was announced. Most of the banks similarly has re-rated. Sampath Bank re-rated. So that is, if you look at the chart for the last 12 to 18 months, we've, I think, seen a significant upsurge in the banks, and all that is higher earnings coming post restructure. Now, the exact restructure of SLDBs, you didn't see it converting it to profitability, because SLDB provisioning was not reversed, and it was completely used to up the ISB provisioning, that is International Sovereign Bond Project. So in terms of profitability, you didn't see a huge benefit. But going forward, now that everything is completed, you will see a major benefit with impairment provisioning overall coming down. So that is what we are expecting going forward. So I think we've answered a lot of questions, and we've gone over time as well. So I think we will conclude the webinar from here. We can answer any questions via email. If you can write to us, you can write to research@firstcapital.lk. I will hand over proceedings back to Netmi for concluding remarks.
I would like to thank everyone who joined, and I hope you all understood and clarified any doubts you all previously had. And like Dimantha said, you can always reach out to us, and we will be there to answer. And we also truly appreciate your time and engagement. So with that being said, I would like to formally conclude the webinar now. Thank you.